This is Capital Ideas TV. Coming up, the best of PDAC with the CEO of Sandstorm Gold, building a premium streaming and royalty company. LSC Lithium CEO, proving out a massive land package in Argentina. The head of Farr Resources, sitting on a big kahuna of a lithium mine in Manitoba. And Pacific Rim Cobalt CEO on a promising cobalt play in Indonesia. Hello and welcome to Capital Ideas TV. I'm Mark Bunting. If you want to get a sense of where gold prices are heading, you just have to listen to the buzz on the floor of PDAC, the big mining convention held in Toronto every year. In years past, the mood was kind of grim with gold in a down cycle and most companies were just cutting costs to the bone. But the last couple of years, some hope has returned. This is a snapshot of gold cycles dating back to the 1970s when gold began freely trading on the open market. The yellow metal tends to trade in 8-year phases. The first 3 enjoying rapid expansion, followed by a cool down in the next 5. 2018 marks the start of the next cycle, and some industry watchers are predicting an upswing if history is any guide. If that's the case, then gold miners should be entering a phase where boosting production is a priority. That should bode well for Sandstorm, which has 175 precious metal streams and royalties around the world with a number of different gold companies. Its mix of producing and undeveloped projects has it poised for some solid growth in the next few years. Sandstorm streams and royalties currently produce about 60,000 ounces of gold. That's expected to more than double to 130,000 ounces in just 4 years. That's earned Sandstorm some high marks from analysts at Paradigm Capital, who call it a growth leader among its class. Sandstorm will have plenty of opportunity to capitalize on the market upswing this year and bolster its value proposition. It has a $150 million revolving credit line and no debt. The CEO, Nolan Watson, discusses his priorities for 2018. Nolan, there are a number of gold streaming and royalty companies out there, as you know, the Franco-Nevadas, the Royal Golds, and others. But how does Sandstorm differentiate itself in terms of your approach to the business?
Yeah, Sandstorm has one of the benefits of being one of the top royalty companies in the world. We're sort of top 5. And one of the ways that within that top 5 we differentiate ourselves is a huge focus on exploration upside. So what gets us excited is finding assets where we think that they can double, triple, quadruple the mine life compared to what we paid when we invested in that royalty. So one of the fun facts for us right now is that for every $1 invested in Sandstorm, you get more than double the number of meters drilled on properties that Sandstorm has royalties than any other royalty company in the world.
So that brings us to Hod Maden in Turkey, a deal you recently struck. You're hoping to double production by 2022, and clearly you feel comfortable with geopolitical risk because you have a Turkish partner. So tell us about this project.
Yeah, so I guess the doubling of production by 2022 is a few assets that are coming online. We've got Cerro Moro, Aurizona, and Hod Maden is the biggest of the new assets coming online. And so it's a project that we're particularly excited about. What we own is effectively a 30% net profits interest. So we get a check every year based on 30% of the profits of the mine. It's going to be built here over the next few years. It's one of the highest grade undeveloped gold projects in the world, period. The high grade zones average about 30 grams gold per ton, and it's over 40 meters wide, and it's sitting right at surface, so it'll be one of the lowest cost producers once it's up and running as well. The project operator is one of the largest multi-billion-dollar conglomerates in Turkey, so they're an amazing partner to actually be owning and operating the mine, and so we'll be getting checks every year from that once it's built.
You've got no debt, you've got a $150 million revolving credit. What are the next steps with acquisitions, and how do you want to tap that money?
We have a substantial amount of cash flow coming in from operations, so in 2018 we plan on buying a number of royalties. Virtually all of that will be done with the cash flow from operations. If we find a really exciting big royalty we want to buy, we might temporarily draw down on that $150 million revolving line of credit. So we can draw down on it at any time for any purposes, but then we'd repay it really quick with cash flow from operations.
Analysts usually say that Sandstorm trades at a discount to Franco and others. Why do you trade at a discount, and how do you narrow that gap?
Yeah, I think the trading multiple the royalty companies trade at is directly proportional to the perceived safety and size of that portfolio. And so if you want to invest in a company that has 500 royalties, that's safer, but you're going to have to pay a much higher premium. So we trade at about 1/3 the multiples that, say, a Franco-Nevada would trade at. And I think what most people don't realize is how quickly we have grown and diversified the portfolio. So in Sandstorm, you not only get more growth than any other streaming and royalty company in the world, bought and paid for mines that are being built. You get more exploration for every dollar invested, but you get that portfolio effect. And I think a lot of people are just starting to wake up and realize that we have 175 royalties and we're getting cash flow from all over the world.
We feel like we're the wave of the future in terms of how people test for things. We anticipate being the first sample-to-answer instrument that can process up to 22 pathogens at a time. Whatever you want to test for, you can do it on your own. You don't have to ship it away to a lab. You don't have to have an expensive microbiologist. It's something you can do on site. You collect that sample, you input it into the machine, you hit a button, an hour later you get the result you're looking for.
The proverb, good things come in small packages, is often associated with diamond rings, but it can also describe one of the lithium industry's most lucrative geographies, and that would be South America's so-called lithium triangle, a region that ultimately makes the electronics running our world possible. The area stretches across parts of Chile, Argentina, and Bolivia. It's home to the bulk of the world's lithium resources. Low estimates put it just over half of global supply, while high estimates peg it at closer to 3/4. All of that lithium is found under a unique stretch of desert expanse that straddles the three countries. High up in the mountains are vast salt flats where lithium forms in the brine pools that dot the region. The metal is typically found at shallow depths, making it both easy and cheap to extract. LSC Lithium is one of the companies hard at work in the lithium triangle. It holds the rights to 5 major projects within Argentina's portion of the triangle. LSC's total land package spans more than 300,000 hectares, and drilling work to date point to high-grade deposits with significant potential. LSC Lithium is in the midst of an accelerated exploration program. It aims to have fresh resource estimates for all 5 of its properties in place by this year. From there, it will kick off commercial production of lithium carbonate. CEO Ian Stalker details the progress his company has made and how he intends to get the most out of the lithium triangle. Ian, you're operating in the lithium triangle. You've had a couple of resource estimates come out recently. So tell us what you have there in Argentina, and tell us what you're discovering with your resource numbers.
Sure, we are there in the lithium triangle, and the 2 states that we are in are called Salta and Jujuy. Great to be working in both of them as it happens, because the government in both cases are extremely supportive of companies like ours coming in to develop the lithium space. And I think they see the benefit of us coming in, getting money spent obviously, which brings employment and wealth to the area, and transferring skills into their environment. So very positive for us in that regard. We got in there around about 2016, 2017, and we built up a very large portfolio of properties to the extent that we have over 300,000 hectares, which is by far the largest size out there by any measure in the lithium space. And from that then came the second phase of our development, which was really converting that property portfolio into resources that you just mentioned. And so yes, we recently put out 2 resources, one in Pozuelos and one in Rio Grande.
And what did you discover in those reports?
I'm delighted to say that we've now got a base case just from those 2 areas, and we've got 5 main projects out of that 300,000 hectares. We've got a base case of now 4 million tons of lithium carbonate equivalent, 2.2 being in Rio Grande and 1.8 being in Pozuelos. And that's, if you like, the starter kit. What we hope going forward, of course, and we're still working on the ground very, very hard, is that sitting next to Pozuelos is a second salar, which at one stage was part of the salar itself, called Pastos Grande. And internal estimates only, and that's all it's worth, it's not a measure, it's not a 43101, suggest to us that there's a potential for 1.5 to 2 million there. So if we're right in that estimate, then between Pozuelos and Pastos, we end up with plus or minus 4 million tons. And that's a great starter kit to move ourselves into the engineering phase, and from the engineering phase into the production. For us, we target production for 2021 from that area. In Rio Grande, the second one, 2.2 million tons, but what was interesting about that is that the depth of that salar is over 500 meters. We've only measured the top 100. So if your arithmetic is as bad as mine, you know that 5 times 2 equals plus or minus 10. So we should get a nice big resource if we're right again on the exploration feeding into that number.
So as you mentioned, you're working on multiple properties. So can you tell us and tell investors what sort of news and milestones they're going to be hearing about throughout 2018 and beyond?
100%. Look, Rio Grande, we're going to be drilling on through the remainder of this quarter and certainly all through the second quarter. So there's going to be a nice news flow coming out from that in terms of grades and dimensions of the resource itself. We will announce the appointment of an engineering group to the Pastos Pozuelos scenario, which means that will start moving into that pre-feasibility PEA type study event. And so again, there's going to be a regular news flow from that. Pastos will have some drilling done in it. And then in the other area, Salinas Grande, which I haven't mentioned yet, but is a great little project, great big project to be honest. It's one of the largest salars we have. We think there's a 43101 coming out in that in the next 2 or 3 months. So there's a plethora of news releases coming out that from an investment point of view, people will know we exist.
Let's talk about the sector itself. There are a lot of opinions out there. Many people are bullish. We had that Morgan Stanley report that sort of tried to poke holes in the lithium story. So in your investor presentation, you see demand for lithium growing at a compound annual rate of 20% for several years. So give us the bullish case going out a few years in lithium.
Well, here's the anecdotal evidence that I have, even in the last short while. We've moved, as I mentioned, from being this property owner that had 300,000 hectares to the owner now of 4 million tons of lithium carbonate equivalent. And we expect that to grow, as I mentioned earlier there. You know, we expect maybe 7 million by the end of the third quarter of this year. And that's a big number and differentiates us in many ways from some of our competitors. But because we've reached that level of, if you like, value, the increase in activity from off-takers, of people who want to lock in product, I can feel it and I can see it and I can measure it. That goes contrary to someone telling me that the market is getting cool. It's the very opposite. I think the guys are just saying, okay, there's going to be some selective projects that are more likely to progress than others, and we're one of them, I believe, but really the market is still there. In electric vehicles, I mean, someone did a great example a little while ago where they pulled out a mobile phone and said, how quickly do you think that actually gained market appreciation? And it was rapid. And electric vehicles could follow the same pattern. It could be a greater demand than we're even predicting today, in which case then lithium is just going to grow in demand. I
don't suppose you can talk about the stock. Many CEOs think their stock is undervalued. You're one of them. There are a number out there, the Neolithiums of the world, or Cobra and others. Why do you think your stock is not being fully valued by the market?
Well, you're right. We have had to, if you like, catch up the pace. We started work in the lithium triangle, if you like, almost just October last year. And so the initial real rush in the lithium price took place before that. So we kind of hit a stage where the lithium price was a little bit more stable rather than a growing scenario. And therefore, from our point of view, if you start looking at the basics, and the basics are easy to pick up. The basics are, one, what's the size of the land package you've got? Because no matter what happens in the world we live in, particularly the commodity business, it's better to have a big resource rather than a small one, because you get efficiency of size and competitiveness of size. From the land package, and remember I said it's second to none in Argentina, you then go to, well, lithium in the ground. Well, we've got 4 million tons. We think it could be 7. You know, it's our internal estimates, and you must take that with the right amount of concern and anxiousness. But we think it'll be 7 million tons by the end of August of this year. That puts us in the sort of range of big players in the lithium carbonate supply market. So you just need to look at their price and compare it with our price, and you would think there's a fair old 3, 4, 5 times lift.
So we finance top-tier companies in the medical cannabis industry in exchange for a royalty. I love the royalty model. I think it works perfectly for this industry at this time. Debt is largely not available in the US, and equity can be massively dilutive. And the reality is every company in California and most states right now is a startup company. So we offer a very attractive, either a complement or an attractive alternative to debt or equity, which really aligns our financial interests with the interests of the people that we invest in. So when they're successful, we're successful, and the more successful they are, the more successful we are.
The sun is setting on the age of internal combustion engines as electric vehicles slowly step into the mainstream. Now the race is on to satisfy the EV industry's voracious appetite for lithium. Simply put, there isn't nearly enough raw material on the market to fulfill that demand, and likely won't be for some time. This chart from UBS says it all. It lays out all of the key materials in lithium-ion batteries used in electric vehicles. Lithium is tops on the list, with demand expected to increase by more than 1,000% through 2024. As a result, UBS sees lithium prices staying high until at least that year. With that demand backdrop, miners are scouring the globe for lithium deposits. Junior miner Farr Resources believes it's found the Big Kahuna in central Manitoba with a 515-hectare property it thinks is a large-scale, high-grade lithium mother lode. There are 7 known dikes on the project that have potential for lithium deposits. Surface sampling suggests those deposits are generally high-grade. Reserve estimates dating back to the 1950s say there could be 1.8 million tons of lithium to be found on the property. Farr Resources believes that figure could be much higher because shallow drilling was only conducted on a couple of those dikes. Other valuable rare earths such as tantalum and niobium have also been found on the property. Farr Resources is looking to get a better handle on just how big an opportunity it's sitting on. The company will soon wrap up its winter drilling campaign and provide investors with an update. VP of Corporate Toby Mayo gives us a sneak peek ahead of the results and details the company's commercial production plan. Toby, Farr Resources had some interesting, exciting news recently with the purchase of an asset, a deal in the Northwest Territories. Tell us about that.
That's right. On the 1st of March this year, we were able to announce closing an option deal with 92 Resources to acquire up to 90% of their Hidden Lake project in Northwest Territories, which is a high-grade lithium, hard rock lithium deposit in Northwest Territories, just 40 kilometers east of Yellowknife.
So that's one aspect of the company. The main focus right now is Zoro in Manitoba, which where you have some historical estimates, but those are from so long ago in the 1950s. Obviously, you're bringing modern techniques to see what you have there. So where do you stand with drilling right now?
Well, that's right. We've been working on that project since 2016, and we've had now 4 drilling campaigns. We just wrapped up the last drilling campaign about 10 days ago, and we're very happy with what we've been seeing in those holes. Obviously, the visual estimates are very encouraging. The resource, as you pointed out, that's a historic resource from I think 1956. So one of our aims is, of course, to bring that resource up into modern NI 43-101 standards. That project, or that resource rather, focuses on only one of the at least 7 known dikes on the project, and we have a number of additional anomalies that we think are going to warrant extra drilling, and there's a huge potential for discovery there.
You mentioned the 43-101, the technical report that every mining company is required to come up with at some point. Would you say the ultimate goal is to prove out this mine and then to try to appeal to a larger company?
I think that makes a lot of sense. We've proven ourselves to be good explorers, and we can raise money at that end of the spectrum. And although I've been involved with some extremely large projects on the engineering side, I think that a potential buyout would probably be something that we'd look at some distance into the future. We have a lot of work to do before then.
Right. You touched on your background. Let's talk more broadly about the lithium sector. So many people are bullish on the supply and demand equation and pricing as well, but there are some skeptics, like Morgan Stanley recently came out with a report whereby they said supply and demand estimates are just too high and it's not going to be like that. So refute that argument, and I'm assuming you're as bullish as a lot of people that this is going to last for a long time.
Absolutely. I mean, we can't deny or get away from the fact that we need lithium now, that lithium demand is going to grow, and some supply is going to have to come from somewhere. Now, if we take one example, and everyone likes to hear about Tesla and the success story or otherwise that we believe that to be, currently that factory, the Gigafactory in the US, is expected to take just under half of the annual production of lithium. Now, by some estimates, the supply is going to grow far greater, but it's far, far bigger than Tesla because there are plenty of other car manufacturers who are focusing specifically on the EV, electric vehicle lines. Volvo and GM, for example, are both looking at dedicated EV lines. But then China is the big gigafactory, of course. For the one Tesla plant that's being built in the US, right now today, at least 14 that we know of, giga or mega factories are being built. And just at the end of last year, in December, China launched, quite literally launched, the first all-electric cargo vessel. So who knows, the opportunities are endless. This is not going away.
Right now you walk inside a truck and you see multiple devices. You see a fleet management device, you get a two-way radio, black box, tablet of some sort, front camera, $6,000 to $10,000 worth of equipment. We're shrinking down to less than $1,000 in one device. The change in the cabin is just dramatic. It's just much, much safer for the truck driver to be able to use one device. Really what we're doing is we're creating a new environment and a new technology that has not been seen to date in the market.
Electric vehicles have long been seen as the future of transportation, but until recently they were more fantasy than reality. The technology was there, but it simply wasn't economical for the mass market. Now the wheels finally seem to be turning in that direction, with costs rapidly falling. Analysts at BNP Paribas and UBS predict nearly 1 in 5 vehicles worldwide will be electric by 2025. That would mark explosive growth from the 2% penetration rate we see today. The key driver will be battery costs, which are roughly 75% cheaper than they were a decade ago and continuing to decline. All of that uptake in electric vehicles means lithium-ion battery makers will be busy. Bloomberg New Energy Finance estimates production will more than double by 2021. But despite what their namesake might suggest, lithium is not the most difficult material for manufacturers to source. That title belongs to cobalt. Cobalt usage in electric vehicle batteries has grown at a nearly 8% clip over the past 5 years. But battery manufacturers are just getting started. That has BNP Paribas warning of an epic supply crunch that will see demand outstrip supply by a 3-to-1 ratio by 2025. The sky-high demand should keep cobalt prices at elevated levels for several years. Most of the cobalt produced finds its way to the Asia-Pacific region, where many battery manufacturers call home. However, they're quite a distance from the Democratic Republic of Congo, where nearly 2/3 of the world's cobalt originates. Therefore, anyone who can offer a closer source of cobalt should do quite well in the market. Pacific Rim Cobalt believes it has a great opportunity to become one of those suppliers. The company holds an interest in a nickel cobalt project located in northern Indonesia. That puts it just 4,500 kilometers from Asia's top markets. Historical estimates indicate this project contains high-grade cobalt with large and shallow mineralization zones. Pacific Rim already has some permits in place. Now it's working to confirm just how much cobalt it has before moving forward with mine construction. Here's CEO Ranjeet Sundher on his vision for becoming one of the world's go-to cobalt suppliers. Ranjeet, tell us about this mine in Indonesia, its history, and some of the characteristics that make it unique.
Well, about a year and a half ago, we started a project which can be put into production. So criteria number 1 was it must be production permitted. Criteria number 2, it has to have environmental permitting. Our project has both of those. Equally important, if not the most important, is there cobalt on the project? I am not interested in drill bit success. It's a long process. We're not getting any younger, and cobalt demand is now. Our project has had over 850 drill holes by US Steel. They were drilling for nickel, but cobalt is a byproduct of nickel. So historical estimates are 37 million tons of 0.11% cobalt and 1.3% nickel. Those are very good numbers. So we're drawn to the asset for the permitting, for the historical work, for the grade, and if you can't get to the project or if it takes days, again, it presents difficulty. We can fly into the nearest airport, drive down a 45-minute hard paved road, and we're working.
So you've got infrastructure. Being in Indonesia, close to China, China, of course, the biggest buyer of cobalt, that just seems like a natural.
Well, again, the cobalt supply chain is very constrained. China is the buyer. China is the biggest gigafactory in the world. It's not Tesla, it's China's demand and what China's doing to secure that demand. China faces Indonesia. China is a large investor in the mining sector of Indonesia and has been for decades upon decades. They operate numerous mines. They understand the regulatory issues. They understand the permitting process. So in building our company, Pacific Rim Cobalt, we're building something specifically for the China market and for what they're looking for, which is cobalt in a jurisdiction they're comfortable with, and that jurisdiction is Indonesia.
It seems as if your path to production is maybe a little sooner than some people might think. So tell us about that.
The majority of our time going forward is going to be mine planning and process options. We know the cobalt is there. We know the nickel is there. Nickel is also a heavy battery metal, which most people don't know about, but we're a nickel project as well as a cobalt project. We'll spend the next 6 months figuring out how are we going to turn ore into cobalt sulfate and nickel sulfate. We have some people on our team who have done this for a living. They're working full-time on it right now. So we'll be mine planning, processing options, and the entire time we're going to be drilling out the higher grade zones and working towards a larger compliant resource.
And when you look at the landscape and some other companies out there that are doing something similar to you, is there a direct comparison, and how does your valuation compare, do you think?
Yes, again, you have to look for cobalt where cobalt is found. It's a byproduct of copper or nickel. 95% of the mines in the world that produce cobalt, it's coming from copper or nickel. Our biggest comparable would be Robert Friedland's Clean Tech, and they're a comparable because they are a cobalt from a nickel laterite. We're a cobalt from a nickel laterite. Our grades are very comparable. The difference is their resource is 3 times as large as us, but their market cap is more than 20 times ours. So that is the clearest public market comparable. There are some private companies out there. The other companies have a bit of a different business model. So Robert Friedland's Clean Tech is the closest comparable.
You touched on overall demand in the cobalt sector. Round it out here, put a bow on it for investors who may be interested, maybe they're skeptical and saying that, oh, aren't people talking about trying to manufacture batteries without cobalt and that kind of thing. So tell us why we should be buying Pacific Rim Cobalt.
Well, it's day one. We've just started trading a few months ago. We have a strong treasury to carry out all of our business plans. There's going to be a steady flow of news. There's going to be additional acquisitions, and we are going to be one of the first companies publicly listed who is going to be able to produce cobalt sulfate and put it on a table in a meeting in a very short period of time.
Most of the data that's ever been created has been created in the past 2 years. You need a system for analyzing and making sense out of that data, and that's what we do. Where we, I think, really shine is we're a turnkey solution. We have hardware products that we can put in place. We have telemetry that we can put in place. It's all cloud-based, and we do it all for you.
From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Be sure to subscribe to our YouTube channel so you don't miss an episode. And for more great research and great investment ideas through our weekly digest and morning note, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We'll see you next time.